What is up, everybody? Hope you guys are all doing well. Today's video is all about the Fed and how the Fed can impact the stock market either, in a negative way in 2022 or a positive way. I'm super excited about this topic. I've been doing quite a bit of research on it recently, so excited to share my thoughts with you guys today. If you guys find this video helpful or valuable, make sure to like it, leave a comment with your thoughts on what you guys think the outlook is going to be in your opinion in 2022. Super curious to hear about that. Don't forget to subscribe to the channel. So let's jump into it. So before we jump into the meat of today's video, I think it's important to give a little bit of context around why the Fed even exists in the first place. So the Fed was created in 1913. I believe Woodrow Wilson was the president at the time, and the primary purpose of the Fed at that point was to add financial stability to the banking system. So back in the early 1900s, bank panics were pretty common. So, if there was a, issue with the stock market and everybody was freaking out, everybody would then run to the banks and pull out their money because there was a panic. And essentially what would happen is the banks would get to the point where, they did not have the funds to actually give people their money, right? So ultimately, what the Fed was created to do was provide that almost lender of last resort. So when people pulled out all their money from the bank at one time, the Fed could actually loan the banks money so that, the banks could give people what they were owed. And ultimately it, gave more financial stability into the banking system. So with that in mind, as we sort of fast forward to the 21st century, we look at the Fed today, and obviously it's very involved in, what's going on in the stock market, but bank panics, really don't happen anymore, right? Like anytime you need to go to the bank and withdraw money, it's super easy to do that. And part of that is because of the Fed. So if we look at the Fed today and, quickly try and analyze what it does, really the Fed has three main objectives today. So objective number one is achieve maximum employment. So, what that means is, how can we get the, economy in a state where the most people possible are employed that's reasonable, right? Because obviously, you have some people that are always leaving jobs and getting new ones and retiring, so they have a certain percentage of, unemployment that they're trying to hit. The second one is price stability. So, that means that the purchasing power of the dollar, remains stable over time. Obviously, different countries would not want to do business with us, if they, ultimately took out, whether it's, bought US bonds or, converted their currency, if, over time, the value of that currency declined. And that's obviously a really big, hot topic today with inflation being so hot. And we'll get into that, a little bit later in the video. And then lastly, so their third objective as the Federal Reserve is to moderate, the long-term interest rate. And that means that, through the Fed's policies, they can set the Fed funds rate, at a certain percentage, which is the rate at which banks can borrow money from the Fed. And then ultimately that then, almost trickles upward, to the long-term interest rates. And the Federal Reserve has a goal that they set for that particular rate. Then all of that brings us to 2022, and 2022 has kind of been a crazy time. Okay, but in all seriousness, the Fed really does have the ability to either save the stock market or crash the stock market in 2022, which is kind of a scary thing to think about. So now I'm going to go into, my take on, both of those scenarios, and then I will kind of end the video with, my kind of prediction on what I think is going to ultimately happen. So to start, I'm going to talk about how, in my view, I think the Federal Reserve still has a chance to save the stock market in 2022, because, everybody likes to hear the good news first, right? No, yeah, no, me either. But, there's a silver lining here, and the Fed does have the ability to, save the stock market, I believe, in 2022. And the Fed really got themselves into this position of having to save the economy, about a year ago when they introduced the word, transitory into everybody's vocabulary, right? So transitory basically means something that, has an end or doesn't last forever. And that's how the Federal Reserve is or was describing inflation, right? They officially retired the word transitory a couple of months ago, but a year ago they were saying that inflation was transitory. Eventually it would start to moderate, it wasn't going to last forever. And then ultimately they were, proven wrong. If we look at, the inflation numbers that just came out, they were super hot. I think it was 7.3% year over year, and that's, not a small number. So at this point, if the Federal Reserve wants to save the stock market, they have to balance both the ability to rise interest rates without causing a full-on economic slowdown. So let's talk about that balance between raising interest rates and the stock market, because to me there are really two main keys from the Fed's perspective to saving the market in 2022, and one of those keys is finding the ability to balance raising interest rates to deal with inflation versus, doing that in a way that the stock market doesn't freak out and, think that, the Fed's raising rates too quickly. And I think the best way that the Fed can, strike that balance between raising rates and not freaking out the stock market is, first, raising rates in a way that is maybe like a little bit staggered. So rather than having like a 50 basis point raise in March, the Federal Reserve does a 25 basis point raise in March. The market can kind of stomach that and digest it. And then maybe in April, the market or the Federal Reserve does the same thing where they do another 25 basis point raise. And, so there are some risks to that, right? Maybe, it's not quick enough to the point where inflation is still running hot, but I think from a stock market perspective, that would probably be the easiest to stomach. And then the second key here, and, really this is kind of probably even more important in my opinion, is, the Federal Reserve just being extremely transparent and proactive in their messaging, right? So being able to come to the stock market and say, this is our plan, here's what we're going to do, here's why we're going to do it. The market likes data and it hates uncertainty. So if the Fed has the ability to provide the market with that data, even if that data is not what the market wants to hear, I think the market's going to be able to stomach that, digest it, and ultimately move forward in a productive way. And just to quickly recap there before we move into our crash scenario, the two keys to success in terms of, the Federal Reserve being able to come in and save the stock market in 2022. Number one, raising rates in such a way that the market can kind of stomach it. And number two, being as transparent as possible with the market in terms of what the Federal Reserve's plan is. Okay, and now we can really get into, my worst case scenario prediction for 2022, which is the Fed coming in and coming onto the scene and, ultimately causing some sort of recession. And really there are a couple of factors that go into that, right? So obviously we know inflation is running super hot right now and the Federal Reserve has to act. And I think in order for the Federal Reserve to come in and create a scenario that ultimately leads us into a recession, they have to come in and raise interest rates in such a way that the market can't handle it, right? So an example of that is if we look back into the 1970s when inflation was running really hot, the Federal Reserve, kind of at the beginning was playing the politics game. They didn't want to come in and raise rates super quickly and inflation got out of control. And then, ultimately, I don't remember how many years later, but the Fed had to come in and raise rates, and they did so in such a way where their goal was to stop inflation, which makes total sense. But at the same time, the frequency at which they raised rates and the speed at which they raised rates ultimately led to, economic recession because you come in, you raise rates super quickly. The goal is to slow down the economy, but if you do it too quickly, the market can't stomach it and the economy can't stomach it. So ultimately, it leads to a recession because it's just too slow, basically. So just to recap really quickly on the crash scenario, this happens when inflation is running so out of control that the Federal Reserve has to come in and take drastic measures to ultimately kind of stuff out inflation, which, really leads to a slower economy to the point where it leads us into a recession. All right, so now I'm going to give my prediction on what I think is going to happen in 2022. And before I do that, just making it clear, this is my prediction. It's my opinion. No one really knows what's going to happen here ultimately. But, this is just really my best guess based on the way that things have gone and, just kind of me doing my research. But yeah, ultimately, I think that the Fed is going to come through here. I don't think that we're going to go into a recession in 2022. I think the Fed is going to come in and be transparent with the stock market and raise rates in such a way that A, inflation ultimately slows down, and B, the market can stomach it, right? There's I don't think that there's a scenario here where the Fed, doesn't come in and raise rates and shrink its balance sheet. But yeah, I think it's going to do it in such a way that the market can handle it. And ultimately, it's going to be a bumpy ride in 2022. There's going to be a lot of ups and downs, but in my opinion, that is kind of where opportunity comes in. I'm a long-term investor, so when it comes to buying stocks, I'm really going to try and take advantage of those scenarios in 2022 where we see those pullbacks and get into the stocks where, maybe there's a stock where I want to get a position. I've been waiting a while because I don't agree with the current level. That's where I'm going to ultimately get in, is on those dips. All right, so that is it for today's video. Thanks everybody for watching. Don't forget to like and leave a comment with your thoughts on what you think the Fed is going to do in 2022, and don't forget to subscribe to the channel if you guys felt like this was valuable, and I will see everybody in the next one.